Welcome to Shadow of Truth with your host, Abe Kransler from InvestmentResearchDynamics.com and Rory Hall from thedailycoin.org. And today is Friday, August the 7th, 2015. And we've got a quick market update for you. And without any further ado, here we go. So you got Jade Helm shoved up your backside over there, eh?
Yeah, before we talk about that, there was two kind of really spooky events that occurred in the last week. Just wanted to point out here that I think they're starting to lose control of these markets. I mean, for as illegitimate as today's jobless or non-farm payroll report is, it still missed what the market expectation was and what the consensus estimates were. And typically when that's been happening, the S&P spikes up to the moon on the expectation that, the Fed's not going to raise interest rates, which they're not going to anyway, but that's just how the hedge fund computers respond.
Yeah.
And today it obviously missed, and the S&P actually sold off, and they propped it back up. It was flat. It might have even been slightly green for a brief moment. And now it's selling off again. And not only that, but gold and silver are running. Silver is now over 15 for the first time in a while.
Wow.
It's up 2.3%, and gold is pressing 1,100. Now, they've been working their hardest to keep it under 1,100 and really under 1096. So it'll be interesting to watch today's close. But in the last 2 weeks, we've had several incidences where the S&P just all of a sudden does a cliff dive. And another thing that it's not being pointed out on mainstream financial media is that almost every day there's at least 2 or 3 stocks that have stunning cliff dives.
I noticed that yesterday. I noticed that there were several stocks that it's like a waterfall.
Yeah, that's right. And it's interesting because, and most people probably don't remember this, or they weren't following the markets like they may be following them now, but I remember back in, late 07, early 2008, the same thing started happening before the S&P really started falling off a cliff overall. And there used to be a guy who wrote about it, and I can't remember who it was, and he referred to it as the turkey shoot, where, you might have a day where the S&P's up, but you get a stock like Apple or Amazon or, whatever, not necessarily those two stocks, where they would report earnings and the stock would drop 20%. And we're starting to see that again. And to me, it's a signal of underlying weakness. And if you look at the Zero Hedge does a good job of cataloging this, but if you follow the sort of underlying internals of the market itself, the underlying, but beneath just the S&P index, which they can prop using futures, pure paper, the fundamentals and the internal statistics of the market are starting to disintegrate. And just one last point, because I thought it was hilarious that John Paulson's latest SEC filings showed that he largely got out of all of his precious metals exposure. He said that his gold fund is dormant for now, although it's still alive. And he said that he's got 20 or 25% of his portfolio in healthcare and biotech. Well, guess what? One of the worst performing sectors so far this quarter has been biotech. Nice move, John. One-hit wonder. He made a ton of money shorting the mortgage market using derivatives and with the help of Goldman Sachs because of his connections. And he was a one-hit wonder. He's a one-trick pony. Way to go, John.
Well, what about crude? Looks like it's doing another nosedive. I mean, it looks like it's kind of moving in a direction that is reflective of our economy.
Yes, absolutely. And thanks for bringing that up, because that's actually a really good point, Rory. I was chatting with a good friend and colleague of mine yesterday who follows this stuff as closely as I do. And he pointed out that, the crude oil situation is a supply and demand situation. You've got declining demand, as you pointed out, because of a weak global economy, including and especially the United States. And you've got supply that keeps building. And the difference between the oil market, and this is what he said, the difference between the oil market and the gold market is they can't prop up the oil market with paper the way that they're smashing the gold market with paper. And the reason for that is because in the gold market, very little physical gold actually changes hands outside of China and India and Russia. And so as long as the West can keep deliveries flowing into those countries, they can take the price down as much as they want with paper, because the big hedge funds, there aren't any natural end users of gold per se other than investors, and the big hedge funds just trade it with paper. And that's why we have this 120 to 1 paper to physical ratio on the COMEX, and at least 100 to 1 ratio in London. But with oil, it's a physical commodity that gets used, and people who are long oil sell that physical oil into the market, and the more they sell it, the more it drives down the price. And they are able to step in there and prop it up temporarily with paper, like they did yesterday, midday, when oil had threatened a 43 handle. And actually today, it did break 44 briefly, and they've got it back up above 44. But I would not be surprised in the next month or two to see oil below 40.
Really?
Yes. And the reason is they can't, because there's just so much physical oil that's flooding the market, they can't keep it up with paper. And if we had this phenomenon in gold where the physical market, everyone who was long paper decided to take delivery of gold, it'd be the exact opposite problem in the gold market.
Well, and speaking of the gold market, I found it interesting. Chris Powell posted an article yesterday over at GATA. Yeah, actually, I found this article over at the News Doctors, and Eric had posted it. And the article was written by James McShirley, who is a writer for, apparently, or Bill Murphy over at La Metropole Cafe had posted it. And Chris Powell picked it up also and had it over at GATA. And Niels Christensen said, and this is a direct quote, "The one bright spot for the precious metals market appears to be the physical market, as the U.S. Mint reported a 469% increase in July coin sales compared to last year." Then Christensen hands off the conversation to Peter Hugg, who is the director, one of the directors over at Kitco. And Hugg said, "It is not just the mint that has been unprecedented, that has seen unprecedented demand for bullion, as prices significantly dropped last month." In this morning commentary, Peter Hugg, global trading director for Kitco, said that many bullion dealers have been struggling to obtain a supply of silver coins and small gold bars. However, he added that he does not see this re-emergence of physical bullion to help support prices, as gold trades under $1,100 an ounce and silver under $15 an ounce. Underlying theme of what these gentlemen were saying is that there's massive demand, obviously, for physical metal, but the derivatives are what's keeping everything suppressed, which is for these guys to, in an offhand way, say that market manipulation is indeed a fact is pretty significant. But I mean, how do you have a 469% increase year over year, and the price goes down? How does that happen?
Well, you're just talking about mint sales, and the mint sales are nothing compared to the amount of gold and silver that's flowing into India and China and most of Asia, if not all of Asia. In fact, South Korea, and this of course was not reported by the mainstream media, South Korea's central bank started buying gold again this month. I get a lot of my information from John Brimlow's Gold Jottings report. He covers the entire global physical gold market and talks about everything that's going on. And there's two things that are clear. China has stepped up its imports of gold, and you can't just track it through Hong Kong. Hong Kong is only one port of entry for gold into China. They also import a lot of gold through Beijing and Shanghai, and China doesn't report those numbers. The only reason we get the Hong Kong numbers is because the Hong Kong government reports the exports into China, and that's the only reason. But you can follow the numbers from the Shanghai Gold Exchange, and Coos Jansen obviously has educated the market on the withdrawals. But the other side of the coin is you can't withdraw gold unless it flows into the Shanghai Gold Exchange.
Right.
And over the last 3 days, up through yesterday, China had delivered nearly 300 tons of gold into the Shanghai Gold Exchange. It's by far the most amount of gold that's been delivered into the exchange since I've been following this.
In 3 days?
3 days.
Oh,
and I get those numbers from John Brimlow's Gold Jottings, but you can also get those numbers right off the Shanghai Gold Exchange website. It's just easier for me to pull up his email and get the numbers. And the other thing that's happening, and that's where I found out about the South Korea news, the other thing that's happening now is we're starting to go into the Indian wedding season. And while the anti-gold propaganda was flowing profusely throughout the media, one of the things that the Indian gold buying season is dependent on is a strong monsoon season, so that there's adequate moisture for the crops, because the big buyers in India are the farmers, and they harvest their crops, and the amount of crops that they harvest and sell is directly correlated with the amount of gold that they import. So everyone becomes a weatherman when they're watching the Indian gold buying season. And I guess early on in the season, the monsoon season was kind of light, and of course the anti-gold propaganda, which I call anti-gold terrorism in the media, was like making a big deal of it. Well, as it turns out, and Brimlow reports on this every day, the monsoon season has turned out to be better than normal. And so we're expecting a bumper crop in the agrarian economy there, which also means there's going to be serious demand for gold, especially at these prices. And I think it's going to come to a head this fall. I really do.
And which leads me right back to, where is it going to come from? We're seeing shortages all over the place, and when I say all over the place, I mean all over the world.
I don't know. Ask Bix Weir. He seems to think the government has all these hidden holes in the ground in the Grand Canyon where they're pulling out silver and gold.
Well, I mean, and it's I know you find that to be amusing, but where else could it be coming from, Dave? I mean, seriously.
It's coming from vaults. It's coming from central bank vaults. I mean, the central bank vaults aren't empty. It's coming from Western central bank vaults. It's coming from bullion bank investment vaults. They're hypothecating this gold. We know they're hypothecating it. It's coming from GLD. I mean, GLD was founded for this specific purpose, but they're going to run out of it, Rory. And that actually goes back to the original topic, which was, my Jade Helm experience the last week. And I think that's why we're seeing, an escalation in both domestic and international military preparation by the United States, because I think the U.S. government knows they're going to lose control of this, and they're going to lose their power if they lose control of it.
Well, they are losing control, period.
That's right.
I mean, and I hate to say that, because being an American citizen, I mean, I love my country. I don't love my government. I don't love a bunch of tyrannical dictators that are, that have created this police state that we currently live in. And I don't love the fact that they are market manipulators, and that they're just criminal to the core. I mean, that's just that's the bottom line. They're just criminal to the core.
Rory, I take a different angle on this. I despise our government more than anything, but I also do not love this country anymore, because it's the people of this country that have let this happen.
Well, that's true.
And that's what the problem is. And you know what? I've traveled enough around the world to know that you meet interesting people everywhere. And for as much as, the United States likes to think that it's exceptional, and that this is the greatest place to live, that's actually not true. Because if you spend any amount of time in some of these other countries, it's really nice in a lot of places. Even supposedly countries that supposedly have, dictatorship type governments. I mean, that's a bunch of propaganda BS that
Yes.
we've been fed since we've come out of the womb. And this is not the greatest country in the world. In fact, our healthcare system is not even in the top 30 anymore.
My main concern at this point is the retirement funds that are sitting out there, because that's a massive pool of wealth that has yet to be seriously tapped. I mean, they're putting things in place, and that is my main concern at this point. And it's not for myself, because I don't participate in it. It's I mean, I do through my wife, because she refuses to get out of it. That is my greatest fear right now, in all honesty, because that's one of the few remaining large stashes of cash that these criminals can steal, and they're chomping at the bit. They're trying to figure out how to get to it.
Actually, you know what? I used to think that there was this big pool of cash that was out there, and then I started thinking about it in a different way over the last 6 months. And they've actually already eaten into a big part of it, more than people realize. I mean, almost every single major pension fund, and in fact, probably every major pension fund, public and private, is massively underfunded. And to the extent that it's underfunded is the extent to which it's already eaten away at current contributors to these funds. It's already eating away at their future ability to receive payments from the fund. So, for instance, if you've got, fill in the blank, Illinois State Retirement Fund, which is one of the worst ones underfunded. And let's say it's underfunded by at least 60%, and that's on a mark to phony market basis, where they've got the real estate and the private equity investments way overmarked. But let's say it's 60% underfunded. That's basically saying it's 60% on margin. So in other words, the equity in that fund is only 40%. So that fund has already been chipped away at by 60%, leaving 40% left if you sealed it off and unwound it today. Well, there'd be 40 cents on the dollar left in that fund.
What are the 401ks and the IRAs? That's more what I was referring to. And 401k, and you can correct me if I'm wrong, Dave, but the understanding that I have is that was never actually intended as a retirement account. It was actually it was an account that was designed specifically to allow corporations to be able to stash cash that would defer their tax payment, but it was never designed as a retirement account.
Well, I don't know about that. Whatever. Yeah, that's probably there, but yeah, I mean, the 401ks, you're talking about private pension funds, and those are the same deal, Roy. They're all massively underfunded. The way pension accounting works is these pension funds don't. I mean, they'll assume like a 7 or 8% rate of return, when in reality, on an annual basis for the last several years, they've been returning maybe 3 or 4%.
Maybe.
And so they're only contributing. Their contributions into the fund aren't keeping up with what they should be contributing to reflect reality. And they're massively underfunded, and it's just another source of financing for these companies to do stock buybacks and highly compensate the upper management. But yeah, it's the same deal as the public pension funds. They're underfunded, and most of these pension funds, if you had to unwind them today, you probably return 40 or 50 cents on the dollar. In fact, a good friend of mine was involved in dismantling a pension fund, I don't know, about 5 or 6 years ago. It was an auto parts manufacturer, and they ended up transferring the fund to the Pension Benefit Guarantee Corporation. And he said when he went into it, the fund was about 50% underfunded. But when the reality of unwinding it occurred, it was really more like they transferred about 30 cents on the dollar to the PBOC.
Jeez.
Yeah. So, I mean, that's what's, so yeah, everyone wants to say, oh, well, we still got the retirement assets. Well, no, we don't have the retirement assets, because in fact, every major pension fund is at least on 50% margin, which means they have only 50% equity left in them, which means they've been tapped into. It's been a slow eroding process, and I didn't really think about it that way until started thinking about that way about 6 months ago.
Well, that's even more bright, sunny news for the weekend. Well, I'm glad that I'm not involved in it. I'm glad that I'm involved in the things that I am involved in, and 100% of those things I control 100%, and I'm not going to give that control over to anybody else. And just for something for people to think about. What's the difference in you controlling your own retirement funds as opposed to some college graduate who's experimenting? They're experimenting. Why shouldn't you experiment? And you don't have the fees that go along with it. Okay, so if X, Y, and Z happens and you lose a little bit of money, it's not really that big a deal at the end of the day. Because if you learn how to recover, and you learn and you teach yourself how to take care of yourself in that way, then at the end of the day, you're going to be in a heck of a lot better shape. Because as Dave just pointed out, 50%, 50 cents on the dollar right now, that's not looking so good. Why not have 80 cents on the dollar? Why not have 85 or 90 cents on the dollar by doing it yourself? Okay, and the reason I'm using those lower numbers is because if you mess up and you lose some money, then there it is. Then it's accounted for. But you still gained, anywhere from 30 to 40% of your wealth back. Or am I completely off base with that, Dave?
No, the problem is people who work for big companies don't have a choice.
Sure they do.
No, when you work for a big company, you got to basically participate in these plans. And especially if you work for the public pension funds. I have a buddy who went to work for an offshoot of the Colorado Public Pension Fund, and he has to put 8% of his salary into their fund.
He has to.
Yes, it comes right out of his paycheck,
regardless of whether he wants to participate or not.
No choice.
No choice. So they just automatically steal 8% of his pay.
Yeah, well, they have to, because they have to it helps them make current payments to current beneficiaries. It's a Ponzi scheme. It's just like everything else. The retirement system is a big Ponzi scheme, and it's going to come crumbling down.
Before I got out, I actually went to my boss and said, "Can I quit the company for a day or for a week to where I can come off of the books and close my retirement account?" And my boss laughed at me, said, "Are you crazy?" But I was dead serious because of what you just said, that I could not get my funds out while I was still an employee. And that was the only way that I could think of to get my money out of the system. But fortunately, my situation changed, and I was able to get my money out and get my wealth out. And now, like I said, I deal with it 100%. It's mine. Can't have it.
Most people don't want that responsibility. It's the same dynamic that's led to what's happened in this country. People just they don't want to think about it. They don't want to see it. It is what it is.
Well, all righty. Well, is there anything else we need to go over?
I think that's about it.